G'day expats, welcome to another episode of Expat Chat, episode 23 today, and I'm joined with Brett Evans, the Managing Director for our Atlas Wealth Management EMEA region, so that's the Europe, Middle East and Africa's region. Brett, how are you going?
Mate, well, thanks. It's a pleasure to be back on board, and for those folks out there who are listening and not watching, and they don't see the little bits of words at the bottom of the screen, I'm joined by my colleague and friend, James Ridley, who's the Managing Director for the APAC region, looking after Asia and the Americas.
That's right, Brett. And what's the weather doing today over in Dubai? What's the latest on the current scene, vaccines, those sort of things? I know you've had some.
Mate, weather-wise, fog. Like really, really heavy fog at the moment, which is quite typical for this time of year. Visibility's down to sort of 40 and 50 metres. Unfortunately, there's 200 nationalities that do drive on the roads in Dubai, and probably about, I'd say 180 of those 200 nationalities do not know how to drive in fog. So it's a bit of that sort of you hold your breath and off you go when you set off in the morning. But it's a strange one we haven't yet.
I know. I was going to go into a funny story then about when I was there and just people driving on the sides of the road in the dirt and the sand, just trying to avoid traffic, doing about 100 kilometres per hour.
Yeah, you can if you want, if the space is there. Why not?
That's right.
I mean, we won't actually mention that I was one of those people at the same time.
No, I was keeping that separate. I was just like, maybe I won't let him know. But that's all right. Now they know now. But I suppose, it's been a big week for Atlas.
Man, it has.
Made a pretty big and amazing announcement, and we thought, okay, well, why don't we drip feed this out via the episode today as well. I'll let you dovetail that in, Brett. What's been the announcement this week? What's happening?
Yeah, look, man, I think what we're trying to, achieve over the long term is to be the preeminent provider of financial services to Australian expats. Having worked in this space explicitly for the last 10 years, we understand the pain points. We understand the maze that expats have to navigate when it comes to managing their finances. Look, getting a mortgage is one of those. Home loans are a big consideration. Property is not just an asset for Australians. It is a hobby. It is almost a religion when it comes to managing their wealth. And for a number of years now, we've always sort of not really, I guess, outsourced that that mortgage capacity to other providers. But mate, we're happy to announce that as of last week, Atlas Mortgages has been launched, and it is a pure dedicated mortgage broker that is there to service Australian expats in providing for their finance needs when it comes to home loans and mortgages.
Absolutely, and I suppose we're very excited with this entity, and also who's heading up the entity, Jeremy Harper. I suppose some of our clients might have heard of Jeremy before, but I suppose starting from the top, he's just such a match fit individual to deal with expats because of his past and where he's been. I mean, he used to be an expat himself. He was residing over in the US, New York, with his lovely wife, and obviously they're back in Australia now, but he understands the, I suppose, significant pain points that expats go through when they're sort of dealing with the big four banks, or I suppose dealing with a credit union, trying to sort of assess their worldwide income or their foreign income and how that might look. So we're very excited about this.
Look, I mean, I think, you hit the nail on the head. There has been quite a lot of changes to lending policies over the last couple of years, not just with expats, but Australians in general. And to me, we always talk about flattening the waves for expats and making sure their time overseas is a smooth process from a management of their financial assets aspect point of view. And, the difference of, I'll get you to run through in a sec what a mortgage broker is, but the difference of working with a expat mortgage broker is he's not going to waste your time or his by talking to a bank that he knows that aren't providing loans to expats. Whereas a domestic Australian-based mortgage broker who primarily works with Australian residents wouldn't know that because it's not working in that space. Jeremy talks to the banks all the time. He's always, assessing whose lending criteria has changed, who is opening up their books to expats. And also,
that's right,
it's not just PAYG, it's business owners, it's investors. Banks have different appetites and different risk tolerances at different times of the day and different times of the week, different times of the month. So that always changes. And just because you spoke to one bank 3 months ago doesn't mean it's a no now. They may have changed their policies. So I think just knowing a professional that straight away knows, okay, we can't talk to those banks, we can talk to those banks, and then just gets that process going and really works through the solution to get great results. You can get loans. You know, expats have thought for a while you can't get loans. You can get loans. You just need to talk to the right bank.
That's right. And I think maybe it was 18 months ago, it might have been a bit longer. I remember reading an article in the Australian Financial Review about the big four banks sort of closing their doors to a degree to expats. And sort of, you know, that's where a lot of Aussie expats are sort of, you know, in the back of their minds going, okay, I can't really go about refinancing. I can't obtain a loan, but you definitely can. When you sort of compare a mortgage broker to just going into or ringing up the big four bank or applying online, remember a mortgage broker is working for you. They're not working for one of the big four banks. They're working on your behalf. They, you know, want to see you getting the best option based on your situation and serviceability. Whereas if you're just approaching, say, the big four bank via your net bank login, they're going to look at your assets. Ideally, they're going to sort of, you know, put you in a category that works with, you know, for them, for their benefit. So just bear that in mind. A mortgage broker is working for you compared to if you're just approaching one of the banks and, you know, they're obviously doing something in their better interest. I suppose in the past, we've seen some investor loans for expats where the interest rates have been more than 6%. And it's disgusting really when in the right circumstances, if that expat might have known that they could have used a mortgage broker that could have got a loan from, say, a credit union. You know, one thing that we're not short of is aggregators and sort of credit unions and banks and non-banks in Australia. So your options are almost somewhat unlimited, to be honest. But when you're using when you're using a broker, you know, they're going to have their mandated list of probably 15 to 20 different aggregators. On top of that list, that's going to have an additional 5 different loans from those aggregators. And based on your circumstances, income, maybe your loan to value ratio already, equity, assets, they're going to come back and go, okay, these are probably the 3 best options based on what you need and what you want. Let's go down the avenue and, you know, let's go for pre-approval and those sort of things. So, you know, biggest takeaway is the broker's working for you. You're not just sort of engaging someone that's doing it on their own.
And I think the other interesting point too, and people may not be aware of this, but over 60% of mortgages in Australia are secured by mortgage brokers, not by walking into a branch. And I think, you know, there's a bit of probably an education piece, and we'll get Jeremy on one of these expat chats soon to, you know, talk his piece. Just for those folks at home, he's actually having his kid this week. So what a time to launch a new business. Reminds me of, I actually launched Atlas, was it 28 days after the birth of my second daughter. So
that's right, Anya. Yep.
Jeremy, I sympathise and I feel your pain. But yeah, I think, you know, people don't realise that the mortgage brokers aren't a fringe part of the home loan business in Australia. They're actually the majority. And people don't understand about, you know, how they're paid and how they work. And essentially their job, as James said, is to go out and talk to 15 banks who they know will be suitable to your circumstances, and then find the right job for you, find the right loan for you, and, you know, and make sure that you get a good result. They get paid in a very similar way, depending on whichever bank they work with, and essentially the bank pays them. So from your point of view, you're being serviced by a professional who can, you know, read the fine print, delineate what is, you know, an important aspect to you, what is not. You know, whether you have an offset account, whether you have this, there's a lot of functionality that goes along with mortgages. And by like what you and I do with tax financial advice and asset management and financial planning, you need someone to cut through the noise in terms of the jargon and say, how does that apply to me? And that's where Jeremy spent, as well as being a top bloke, a consummate professional. He knows his stuff, and we wouldn't have partnered with him to set up Atlas Mortgages if we didn't think it was a good fit when it comes to our expected service levels for our clients. Because one thing we're very proud of is how well we do what we do. And anytime we add to that, those roles and responsibilities, we want to make sure that everyone else is following on the same, you know, same tune.
Absolutely, and I think probably an additional value add, if you ever, you know, I suppose, have a conversation with Jeremy, have a consult with him, is the fact that he's actually a chartered accountant. And not too many people know this, but he has a bit of a history in being a chartered accountant. He's a registered CA, doesn't practice tax anymore, so don't hit him up for tax advice. But the fact that he has that, It means that he can have, some interesting conversations about property, mortgage, sometimes even structuring. I don't know too many mortgage brokerages that are a chartered accountant as well. They've previously been an expat, so that's why I suppose I like driving home the point that he is match fit.
Yeah,
Obviously that's there now, which is great.
that's the biggest thing with expats is they do have that tax element to take into consideration, and that's one of the reasons why we did partner with Jeremy, because he can have that well-rounded conversation. Jeremy's the only mortgage broker that I know that does have that qualification, which means that talking to another mortgage broker, you're only having half the conversation. When it comes to your status as a non-resident for tax purposes, he can talk to you about the difference from a redraw versus an offset account. And that to me is a incredibly important conversation to have as an expat.
Absolutely, and I think it's funny you bring that up. I think a little while ago, Jeremy and I, we did sort of that webinar, and I think off the back of this, we'll get Jeremy on. We'll do another episode of Expat Chat, and we'll grill him on behalf of all our listeners. That way, we can obviously show you how match fit he is. But I suppose the difference between an offset and a redraw account, it's a good point you bring up, and just something to drive home. An offset account is usually preferred for expats, just because obviously the ability to draw out of the funds or the cash out of there, and he's still getting the benefit of being able to claim the tax deduction based on the interest expense going back up. Redraw is very different. It's a part of the loan. It's actually the loan account itself. So very important to have an understanding of that.
And also too, we always talk about our clients' preference to operate in a passive or slightly negative cash flow basis on their property, and you can use that offset account in an amazing way to dial up or dial down your interest cost if you are starting to push up into a positive cash flow. The ability to draw a bit out of the offset account to sort of reduce that offset, increase that expense, and just get good tax results for clients.
That's right, and I think one thing we probably talked about last episode was a bit of a theme with last year was, people repatriating and having a drawdown on maybe an investment portfolio because they didn't have that emergency fund built up. Whereas that's what an offset can be used as. It can build up the cash there. It's proving a tax purpose, but it's also capital you can access in the event of an emergency. You can pull that cash out and use it for whatever it might be. So very important compared to a redraw facility, which unfortunately has the ability to reset the loan and not in a favorable way.
Yep, exactly. And I think, we always stress the importance of liquidity and the importance of having access to emergency cash, whether it's 3 or 6 months worth of living expenses. And, when you've got the functionality, usually, pardon the French, when shit goes sideways, you haven't got time to readjust things. You're reacting to the moment. And the fact that you can pick up your phone and just transfer money straight away in a very tax compliant way too. So that's the thing, and I think it's what a lot of people miss is they say, I can do that. I said, but does it have a negative tax consequence by you reacting to whatever you're reacting to at the time? And they're like, I'm not sure. I'll just deal with that later. Well, don't deal with it later. Set it up properly from the start. And then by structuring your loans appropriately and structuring your accounts appropriately, you're not foolproofing your financial situation, but you're just making sure that you're there ready. If the second COVID Mark II or whatever that black swan event that may be around the corner does affect you. It might be industry specific, it might be country specific, it might be global. We just don't know. I mean, one thing we can always rely upon is the fact that there always will be events like this in perpetuity. So it's in the good times, it's easy to sort of brush it under the carpet and say, it's fine. Take a lesson from the COVID pandemic. These things do blindside us from time to time, and by structuring yourself properly now, it'll mean you're better prepared in the coming years.
Yeah, absolutely. And I suppose going back to the whole, mortgage broking scenario, it's funny when you even speak to close friends and family, the amount of individuals which still just go to one of their big four banks. They don't think about, actually maybe I should do some Googling on a mortgage broker or reach out to a colleague or an accountant that might have a mortgage broker, what it might be. And I'm not sure whether it's just sort of a bit of an unknown fact, but I suppose when you're looking at using one of the big four banks, Commonwealth Bank is an easy one. Their interest rates aren't going to be the best when you sort of stack it up against sort of your other options when you look at credit unions and all those sort of things. We know right now, based on the governor of the RBA, that interest rates are going to stay low. They're not going to go up too quickly at all. I think we'll probably see it at 0.1%, the cash rate for another 2 years as a minimum. And it just means, okay, if we're looking at refinancing, might be an opportunity to lock in a fixed rate. But again, consider using a mortgage broker rather than just relying on what your big four banks are sort of offering you based on sort of, they always send through those emails. Oh, we've got this offer for you. You're, eligible for this offer. It's funny how that all works.
They're not doing it out of the kindness of their hearts. And, I think you hit the nail on the head. When the old school way of banking was you focused on one bank, you built a relationship, you walked in cap in hand, spoke to the branch manager, applied for a loan. He would look at your relationship and say, oh, yes, you've been a good client to XYZ Bank. Here's the loan. These days, the branch managers have no approval process in the branches. It's all done out of a centralised credit facility, either Sydney or Melbourne, depending which bank it is. And
that's right.
It's an unemotional, unattached transaction. They don't care that you've been a client of CBA or ANZ for the last 50 years. It's how does your circumstances fit into their decision-making matrix, which is an algorithm, and they will score you on their own internal systems. And as a result of that, they will apply a yes or a no. So rather than go through that process of pain, talk to a mortgage broker who knows the process internally for each of the banks and goes, well, look, based on your circumstances, these two won't touch you, but these three will. And if I look at the loans that we've been able to secure for clients recently, it's not the big four banks. It's Heritage Bank, the old Heritage Building Society out of back at Toowoomba. It's Kudos, the Qantas Credit Union, which turned into a bank. It's those lenders who are as credited and are as regulated as the big four banks, but not well known.
Not well known though.
I wouldn't know how to call Kudos. But Jeremy does.
I use a mortgage broker for my own loans, and I think my loans are held through a credit union in WA. So, and I've never heard of them before ever. So the fact that it just goes to show, okay, it is actually better to use a mortgage broker because there's probably 500 plus credit unions in Australia, and they do have great loan facilities. They have great interest rates. Recently, back in December, they announced that, okay, they're reviewing and probably going to abolish a lot of the responsible lending rules. So it's actually a lot easier for not only expats, but Australians in general to actually obtain a mortgage based on sort of your sort of preliminary serviceability with, your loan to value, your deposit you're putting down, all those sort of things. So the fact that with those responsible lending reforms being sort of given the axe, it's making it a lot easier for people getting a mortgage these days to either buy their future main residence or a property or refinance.
No, you're spot on. And I think that's the biggest thing. It's there for everyone to participate in. It's just their choice in terms of how they do it. So, like we say with a lot of tax reform and a lot of other rule changes, you don't know what you don't know. So essentially what the approach that we're going to take with Atlas Mortgages is the same approach we've taken as a group with Atlas Wealth Management. Educate, broadcast, communicate at scale, inform people of their options, inform people of what they can and can't do. And then, look, I'm pretty excited about having Jeremy on board because A, he's a top bloke, B, he knows what he's doing. He always gets good results for clients, and C, he's going to make a difference in terms of educating expats, in terms of what their possibilities are, what their opportunities are, and, just really cut through those waves, flatten those waves, and just make it a positive experience, which we're always talking about. Just because you're overseas doesn't mean you should be penalised. We can get back into the penalisation of, with Australian taxes on property. That's a different story. But on the mortgage side, there is no reason why you should be penalised because the opportunities are there. You just need to know who to talk to.
Yeah, absolutely. Speaking of property, I had a call earlier today with a client that was querying whether they'll ever repeal that main residence exemption. It's been brought into...
No, the Australian federal government's got $1 trillion, or soon to be, was it 2024, $1 trillion debt they're going to pay off. And look, it's sad. I've spoken to 1, 2, 3 people in the last 6 months who have sold post 1 July not knowing. Not knowing.
Same. And
it is just, when you tell them what the tax bill is going to be, they're just like, you can see them just want to be sick. But not because they've done anything bad or wrong. They didn't know. So, and I think what we'll see, my gut says the states are also full of debt as well. We might even see that absentee tax come back in for expats in Queensland. Because remember, initially it was for expats, And then they said, no, it's just for non-residents who aren't Australian citizens. But
That's right.
Anastasia Palaszczuk might go, we've got a debt to pay. Let's, get those who can't vote us out to foot that bill. So, look, I think there's going to be a lot of this stuff going on in the next 2 to 5 years.
Well, we had a budget in October. What kind of budget, I wonder, are we going to be staring at when May rolls around? And it was a bit of a soft budget, let's be honest, that was delivered. When we sort of look at the budget that might be delivered in May, I thought previously there was rumours of them looking at getting rid of stamp duty, to be honest, but I just can't see that happening now, given...
They wouldn't be able to afford it.
Yeah. No, not at all. And I suppose big important period coming up, end of March, job seeker, JobKeeper payments rolling back. I think I might have mentioned this to you before, Brett, about on the Gold Coast alone, there's 100,000 local residents that are supported by job seeker payments. So that's the payment that the small business receives to keep these people on as either part-time or full-time. So that's hundreds of thousands of dollars per quarter, I guess, that's being fed millions, actually. Once that stops, if these businesses aren't at full capacity, then all these businesses could go broke, or you've just got all these residents that are now jobless. Now, that's just the Gold Coast. Put this on a national level. I can only assume that they're going to have to keep job seeker and JobKeeper going to a degree, but give it a new label.
Look,
put down some new criteria as well.
I think at some point we need to have that mark to market. I think at some point we need to have that honesty factor of what equity markets went through, back in March. There is that that revision when it comes to just people not living on the crutches. They need to stand on their own 2 feet. And unfortunately, there will be casualties. There will be casualties. But when I was interesting one for you, and this really shocked me. Yesterday, I was writing out the dollars and dirhams article piece for the Australian Business Council in their newsletter, and shout out to Lisa Melly doing an awesome job. 118,000 Australian mortgages are still deferred today. So this is, that was meant to be all wound up, September, October last year. It's only meant to go up 6 months from March to September. There's still 118,000 mortgages. Now, if we, double that, say 2 people per household, we're looking at 236,000 people in Australia who are undergoing that mortgage stress. If you make it 3 people, it affects quite a lot. And there will be that sort of inner and outer circle that it will sort of resonate from as well too. So, like I said in this, update in the dollars and dirhams comment, the government has spent $700 billion getting us to this point, in supporting the economy. They can't afford to keep going down that track. We're talking just a monumental amount of cash. At some point, there needs to be that come to Jesus moment of, okay, rightio, no more support. We need to see how this is going to fan out. But the problem is Australian property market and real estate is such a massive part of the Australian community when it comes to their psyche, their asset wealth generation, and the government's trying to do everything possible to not let that thing fall over. Yeah. But at what cost? Are they going to spend, another, $1 trillion trying to support a market where if they did let it stand on its own 2 feet, the cost might be $100 billion. That's that sort of that balancing act they've got right now. And, and as I said in the article, just reading on I can't remember what I wrote towards the end, but, I said the Morrison government's attempt to spend their way out of a fallout in the property sector might work, or it might not, and all they've done is kick the can down the road. Just remember, when the tide goes out, you see you swimming naked, and low tide may occur in April, May of this year. So
that's right.
The other thing that really just flabbergasted me is for the first time ever, since they've been keeping records on insolvencies and administration, company insolvencies went down in 2020.
Yeah, it's a bit of a shocker, to be honest. I remember speaking to a few accounting mates and them telling me that COVID-19 actually saved a lot of their clients' business because of all the job seeker and small business initiatives. And if, this is one accountant telling me about, a few businesses, put that on a national scale where, you're right. we still haven't seen, I guess, blood in the water yet, where, I guess a lot of businesses will struggle. I think you're right. It's a matter of time before the government reels everything back and goes, okay, we kind of need to see, lift up the blanket or lift up the hood and go, let's see what the damage really is going to be for the next 6 months. And then, we'll try and weather that storm and see how we look on the other side. It's not going to be 6 months. It's going to be probably 12 to 18 months or even a few years, to be honest. But that's another thing, payment rates are still too high for sort of, I suppose, low income earners to be incentivized to go back to work, to build up to full capacity. People keep spending, those sort of things. We are lucky in Australia where COVID levels are so low, but we're still not in a situation where people are going out and spending all this money. They're not putting it back into the economy yet. People are just saving it now, either paying down personal debt, not loans, or paying down personal debt, which is different. So it's going to be interesting. When the March quarter hits, we'll probably have to wait, like you said, probably another few months after that to start to see some of the effects. But you're spot on. I wonder if we're going to see a lot of sort of small business owners start to put their properties on sale going, oh, crap, my revenue is not obviously 100% yet. I can't keep on my employees either. I either let the employees go, but the revenue's still not there. So my next best case of accessing capital is probably going to be selling my property. It's a tax-free transaction. I can drive that into the business and buy a small property. We'll see what happens there. Like, it's just a bit of a snowball effect, which can play out still, unfortunately.
Just thinking out loud, listening to you talking, and I actually think, and here's quite a different theory, and I've never seen this published, and I made it up like 30 seconds ago.
Well, let's scrutinise it then.
Yeah. Here you go. Does the fact that Australia have such a low case rate, is it actually hurting it more financially or economically than a place like the UAE where we're living with 3,000 cases a day? And let me sort of explain that. So when we had one case in Brisbane, they panicked. Everyone went and cleaned out the supermarket and shut down Brisbane for 3 days. Then we had Perth. So that's obviously going to have an effect on the consumer spending habits, which in turn affects businesses, as opposed to when you're used to living with 100,000, 5,000, whatever cases a day, you get used to it and you don't go into such a panic mode. You go into that, well, I still want to live. I'm still going to get on with my life. I'm just going to do it in a more sanitized way.
So you become conditioned. You become conditioned to that being the current norm. So life still goes on. I still keep spending. Economy is okay. Yeah. Rather than, I suppose, I mean, Australia has done well, but you're right. Shit hits the fan when there's a few active cases and borders go down and go, crap, okay. Yeah. I read this morning as an example, prior to this call, South Australia, that state just actually shut their border to Melbourne or Victoria, or I think it's the greater Melbourne region, because there's been a small cluster that's developed off one of the sort of quarantine hotels. So that's a bit of an example right there. Border shutting, okay, that's going to impact logistics. How's it all going to play out?
Think of it like, when there's a cyclone that's about to hit the coast. You go in, you get your toilet paper, you get your baked beans, you buy batteries for your torches, and then you bunker down. But then that's changing consumer spending. That is changing, the way that they're living their day-to-day lives. So, and it doesn't breed any confidence in terms of wanting to go and spend money, as opposed to, I know here living with, relatively high numbers on a daily basis. You don't want to put yourself in a situation that's going to expose you to any unnecessary risk, but also you sort of tell yourself, no, I deserve this because I'm living under this cloud. So you actually spend money. So I don't know, it's going to be interesting to see, and it is going to be fascinating to look at in say December of this year, which economies and where they're going and what their GDP growth rates are going to look like, what that profile looks like based on the scenarios that they lived through during the pandemic. I don't know. It's just, I mean, the rule book's been thrown out. You can't look at Keynesian, you can't look at any sort of, historical models that enable us to review the economic fallout of these scenarios. People rewriting it on a daily basis. So there's just something when you're talking about, I thought, for you guys, when you got 0 cases and you get 1, that's 100% increase. Whereas for us here, if we got 3,277 and that became 3,278, it is be a blip on the radar. However, if we went from 3,278 and that doubled or that increased by 100%, that would get our attention, and then we would really pull back again. So
Yeah.
yeah, I'm just not sure whether Australia's low case rate is going to help them or not. I mean, it's great for you. You can go to bars and clubs and all those sort of things and restaurants and not have to wear masks and you can walk around freely, which we can't. But yeah, it's just going to be, yeah. Sorry, just had a thought.
No, I think it's a
dangerous
really
when
good,
that happens.
it's a really good point. No, I was going to let you keep going on your tangent, to be honest. I always find it quite interesting, Brett. But no, it's a really good point because an example of it is one of the borders shutting today because there's been 8 cases, 8 active cases. And I think there was always a concern that we're going to see another breakout in WA actually. But you're right. We really haven't sort of found a level of conditioning, to be honest. And it's just because our cases have been so low. We've been sort of, last year, yes, obviously we had more active cases, but, you know, relative to, I suppose, you know, per capita, we were still one of the lowest. But you're right, we haven't had a chance to live through a period of conditioning, accepting it, and then I suppose just getting on with things.
Yeah, living with it.
That's right. We've been quite lucky in that regard, to be honest.
Yeah. So,
it's an interesting point you make.
Yeah. I like these things jump in my head. Sometimes they're common sense. Sometimes I just think put that back in the box.
Yeah, well, I suppose we might look at wrapping up there, Brett. Obviously, you know, a few things coming out over the next coming weeks. I suppose, Brett, what's the best way for anyone to get in contact with us if they want to speak to them about their mortgage or, you know, getting a pre-approval or anything like that, having a conversation with Jeremy?
Definitely. It's nice and easy. You can just go to Atlas Wealth, ATLAS Wealth, WALTH.com. Go to contact us. There's a form there. You select what service you're interested in, whether it's financial planning, tax, mortgages. Select that, send your stuff through, and then we'll get that sent out to, that'll come to us. That'll go straight to Jeremy. Jeremy will reach out and book in a time for a Zoom call. And yeah, look, we're really excited about this because we've seen what we can do on the tax, financial advice and financial planning side and asset management side. And to provide that first-class service model to expats is just, you know, expats are our DNA. You know, it's what we're structured and designed around. And the fact that we can do this in the same way, which means they get good results, is just, yeah, we're very excited. And also too, just want to do a shout out to those who have been putting in comments in both the Facebook, YouTube fields down the bottom. That's great. Thank you very much for that because we always love to have a chat with everyone. And also to those on the podcast for reviewing and leaving that. That's fantastic as well. So thank you so much, guys. You know, we do this, you know, because we love it, but also, you know, it'd be remiss for me to say that we love getting that affirmation of people are liking it. Otherwise, just you and I just chat about nothing.
People listening and giving us some sort of feedback. And as Brett put it, we're loving those comments, guys. So if there's anything that you want addressed or answered on these kind of calls, send an email or you know, drop us a line or comment on one of the previous expat chats. We get notifications when the comments go on, so we can go, no worries, we'll add that to, you know, the next itinerary to jump on and as a topic. So yes, put anything in there. We're happy to pull it apart.
We're directed by you guys and girls. So if you want us to address something, then let us know.
Absolutely. Well, Brett, might as well wrap it up there. One thing we did not do today, which I've just remembered, general disclaimer.
General disclaimer. So for those who are watching on Facebook and YouTube, you've seen that little box block up down bottom. For those on the podcast, even though we didn't talk about financial advice, which is good, this episode is intended to be for informational, and we're not talking like with the knives, that sort of nonsense. Just, you know, there's no what was the name of that? Oh no, I'm segueing here again. Remember you get the free knives and stuff. Was it starts with D on the? Yeah. You know, you buy these knives and you get a free pan. Anyway, if someone remembers who that is, it's always on Australian television. You know,
Danos Direct.
Danos. I was going to say it was D. I knew it. So this is not an infomercial. This is for information purposes only, education purposes only, and should not be construed as personal advice. That is the longest disclaimer I've ever said in my life.
It certainly was. All right, guys. Well, thanks for dropping in, listening in, and we'll see you on the next episode.
Cheers. Thanks, mate.
Thanks, mate. Speak soon. Bye.